Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What's going on out there, peeps? Good Lord, it is so hot. It is seriously hot. You ever sweat so much under your clothes that you can feel the drips just going down the sides of your body? That's irritating. I took a shower, a cold one, and came out, put some baby powder on me. Now I got nothing but a bunch of baby powder dirt clots. Okay. This picture of silver is gorgeous. Whenever you're purchasing silver, you definitely want them to be this shiny. Anyways, let's get into what's going on in the market, shall we? Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold, silver, or any other precious metals, head on over to our friends at Money Metals Exchange. The link is down below in the description, or just type in www.moneymetals.com/Pimpy. If you make a purchase when you follow that link, you will automatically be entered for a chance to win 10 free silver ounces. So get started today, and hopefully your stack will start to look like this real soon. So head on over, tell them Pimpy sent you. You can follow me over on other platforms. I do have my own group over on Facebook called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. So head on over here and join us. It's free to do so. In here, I do post updates. If I should get on suspension from YouTube or get removed from YouTube and you want to know what happened to me, I'll let you know right here in this group. I can be found on Twitter, MeWe, YouTube, and the cool thing about YouTube, if you come over here and you join and you find my channel, I got videos going back, I believe, a couple years. So if you want to see some older videos that I have on Nasera, Jacera, gold, silver, cryptos, come on over here and join. Look me up and check out my videos. You can also find me on Odyssey. Catch me on Rumble. When I say that the links for all these are down below in the description, some of you don't know what I'm talking about. It's real simple. Just go down to the bottom right here of any of my videos. See this? This is the description. Hit show more. And there are all the links to all the platforms I just spoke about. So if you do want to head on over to Money Metals, just click it. And there you are. So come on over. Join us. I look forward to having you. Woo, let me give a shout out to all my brothers and sisters that think that this is the time of the year that you should barbecue. I don't understand people out there who are adding heat to the heat in order to cook food. You would think that winter or fall time would be the time to barbecue. I mean, at least fall, because this heat is terrible. So let's get into this, shall we? I'm going to leave a link for this down below in the description. I am going to be there. Silver Symposium. This is in September 29th through October 1st of 2023. Over at Caesar's Palace. I want to invite everybody to come out there and join me. It should be a lot of fun. We'll kick back, we'll have a few drinks, and somebody says, so you're off the wagon? No, I'm not off the wagon. But when I get over there to Vegas, it's kind of hard not to drink. And again, you guys, you don't get it. When it comes to my drinking, I've slowed down tremendously, like more than people would ever know. But it's hard to go 100% cold turkey, though I do appreciate the support. But back to this. This is in Vegas, my favorite second place to live. I want to encourage you guys to come out there and join us. We're going to be at Caesar's Palace. You'll see me walking around. You can't miss me. I got a hat on. This is Pimpy. I'll have a jersey on. This is Pimpy as well. Let's have a couple of drinks. You're more than welcome to approach me and ask me all the questions you want. So what's going on with cryptos? Bitcoin is starting to take a dive. It's at $30,381.86. But the one crypto that's not, Ethereum, it's almost getting up there around 2,000 like it used to be. Sitting at $1,915.13. XRP, we're not quite going in the right direction if we're going to hit $500,000. You can't even hit $500,000, let alone $500,000. XRP is at 46 cents. Cardano's at 28 cents. Dogecoin's at 6 cents. Litecoin, woo, man. What the heck happened here? Not only did it get up into the 90s, but it shot right past it. $106.36. Solana is at $18.06. Polkadot is at $5.17. Polygon is at 65 cents. And then the coin we all love, Poor thing. It is at 5075. Terra Luna Classic is at 4086. Not going in the right direction. Satama is at 3085. Come on, Satama. You were just recently close to taking away a zero, but you went down just a little bit. People were asking about the ruble. Oh, come on, man. This is at 0.011. They have a whole new set of sanctions on them. Of course it's going to go down, regardless of the fact that they're doing their thing with gold. Look, you ever notice that those countries out there that get away from the Rockefellers all of a sudden get attacked? Libya had no Rockefeller bank there. Gaddafi gone. Especially when he wanted to partner up with Saddam Hussein in order to push a gold-backed currency. Saddam Hussein gone. Cuba having issues. So what's going on with Russia? This is a proxy war. Look, we have our own soldiers there. I promise you, we do. Special forces fighting. What are they trying to do? Regime change. They don't want anybody, and I mean anybody, to go to the gold-backed currency. So they're going to do anything and everything they can to disrupt that whole flow with the BRICS nation, and Russia is a key figure there. But anyways, Russia's ruble is at 0.011. I wouldn't worry about it. They're not going to stay down. The market closed on gold today at $1,919.80. It closed on silver at $22.75. Didn't I tell you? It rebounds really quick. Already shooting back up. So what's going on with Ethereum? Why the heck are they doing so good? Joe Lubin, the SEC, has spoken on Ethereum status as a security or commodity. The Commodity and Futures Trading Commission, Lubin said, viewed Ethereum as a commodity. Ethereum co-founder and Consensus founder Joseph Lubin, that last name Lubin. I wonder if his wife ever comes up to him and says, "You want to give me some Lubin?" Sorry, couldn't resist. Has said that the U.S. Securities and Exchange Commission has already spoken on whether Ethereum should be treated as a security or commodity. In the interview with CNBC, Lubin referred to the former SEC Commissioner Bill Hemann's 2008 speech on crypto securities and Ethereum. Remember, this is the same speech that XRP is using in their case against the government, stating that Hemann already said that XRP was a commodity, I believe is what it was. You guys let me know real quick. He said, however, new records show that Hemann was repeatedly forewarned by colleagues that the speech would confuse markets. Why would it confuse it? He knew better. He was in the right position to make that statement. This is their way of covering up their asses so they could try to control cryptos. Trust me, they didn't think that cryptos was going to become this popular. The Commodities and Future Trading Commission, Lubin said, viewed Ether as a commodity. The three most valuable assets, including Bitcoin, Ethereum, and Tether, according to the CFTC chairman, Rostin Benham, should be governed by his agency like commodities. Gary Gensler, the current chairman of SEC, has only publicly recognized Bitcoin as such and has refrained from declaring Ethereum to be either security or commodity. Legislation to clarify this situation is being drafted by congressmen, including Cynthia Lummis and Christian Gillibrand, who has stated that their agreement with the CFTC that Ether is a commodity along Bitcoin. The regulatory decision that Ether is not a security is a foregone conclusion. Anyways, we're going to move into this video. We're going to do some clips from it. In here, this guy is trying to state that Jerome Powell is there fighting the New World Order. No, he's not. Based on the information that they're sharing with you, he is not your friend. Let's listen in.
I'm Michelle McCory. Thank you for joining us. Fed Chair Jerome Powell is indicating that he will likely raise rates 2 more times this year, and seems like that message is sinking in.
I do believe Pimpy said that, in my opinion, we would see Jerome Powell raise rates 2 more times. Just saying.
The bond market is finally getting in sync with Powell's outlook. Traders have scrapped once aggressive wages that the Fed will pivot to easing policy before the end of this year. Bond yields have risen back towards levels seen before the Silicon Valley Bank collapse. And the CME FedWatch tool is pricing in a 77% probability of a rate hike in July. Now, the Fed paused in June following 10 straight hikes in 15 months, the fastest pace of increases in 4 decades. The Fed has now increased the federal funds rate by 500 basis points since March of 2022 to the 5 to 5.25% range. Well, my next guest accurately forecast that the Fed would raise rates to this range when many were forecasting a Fed pivot. He said that Powell would continue to hike. And he now says that the commercial real estate sector will be the next crisis to hit the U.S. economy in the second half of this year. He says this will be...
Not to continue with the I told you so, but I told you so. Real estate is dropping in value. Understand that this is done on purpose. They are sabotaging our banks. A lot of these banks are holding on to the loans that people have. They're consolidating it with a handful of banks who then will dictate what's going on with your loan. Keep in mind that all these people work together with the World Economic Forum. Remember the slogan, you'll own nothing and you'll be happy. They use the banks, they use the Federal Reserve to raise rates, they use the banks to consolidate their loans to a point where people can't afford to make payments or make ends meet. They'll keep doing it over and over. If that don't work, I promise you, they'll pass a tax on your property. So that is so expensive that you can't even afford your own home. So that people like BlackRock and Vanguard and the Soros Foundation could come along and buy all the properties up. That's exactly what's happening now.
Exacerbated by rising oil prices, pushing inflation higher. But he also believes that Powell may really be fighting a much bigger fight than inflation. Tom, welcome back to Kitco. All right, well, Tom, last year that we had you on Kitco News, about 10 months ago in August, you predicted that the Fed would continue to increase rates. The Fed funds rate range at the time was 2.25 to 2.5%. Turns out you're pretty much on the money so far. What are you forecasting now?
Well, at the beginning of the year, I said they'd go to 7%. I don't think we're going to get there. It's pretty clear now that with quantitative tightening running in the background nicely, ticking away at $95 billion a month, and you figure about I think the way it's been described is about every $100 billion worth of Fed reduction in their balance sheet.
I want you to understand something, that every time the Feds raise a rate, for every 0.5% that they raise, the United States lose 1 million jobs, a million effing jobs for every 0.5%. So to go around talking about how Jerome Powell is our friend and he's there fighting the powers that be, no, he's doing exactly what they want. Continue to raise the interest rates, eliminate jobs so people have no way to make a living. The interest rates get so high that people can't even afford to make their house payments, their car payments, or their credit card payments. They lose everything, and then people like BlackRock, George Soros, Vanguard come along, and they buy up all of these properties because you can't afford to pay for it. That's just the interest rates. Let's get back to the fuel situation. Oil prices are so high, that's going to continue to make gas prices rise even more. So if you have to commute, guess what? You're screwed. Half the money you're working for goes to your gas tank. And for those people who deliver cargo and goods to the stores inside the middle of the United States, they're not going to want to pay these high gas prices. A lot of truckers are going to end up going out of business. You're not going to be able to get the goods necessary in order to survive.
Equivalent to another quarter point, right? So in full terms, the Fed's probably already raised, in effect up to as high as 7 or 8% when you factor in quantitative tightening. Powell wants to go to at least 2 more rate hikes before the end of the year. I think he personally probably wants to go higher than that. And the point and the reason is that he hasn't broken what needs to be broken. He's beginning to break the things that need to be broken. And inflation, for the most part, has come down because of year-over-year baseline effects in gasoline prices. We've had a huge drop in oil prices as the Biden administration has flooded the world with cheap oil. U.S. oil production is peaking back at its pre-COVID highs, over 12 million barrels a day. The Biden administration has flooded the world with cheap oil from the SPR. And that's brought oil prices down, 35, 40%. So when you back out gasoline prices, the fall off in gasoline prices from the CPI, you get a really nice, come down in CPI on a year-over-year basis. And I think we're going to see that even accelerate to the downside with June and July's print, because the worst inflation on a monthly basis last year was in June and July, right? 1.3 and 1.0% were the increases done. So once we get past that, then I think we're into a low baseline and a potentially higher inflation numbers from there once we get into the winter season when oil demand will rise. I think we'll get a peak in U.S. oil production as well as an uptick in demand, certainly relative to supply, as OPEC Plus has cut off over 2 billion.
Did he say an increase in U.S. oil production? Does he know that Joe Biden, what did he do? Well, he signed an executive order eliminating the pipeline, and 14,000 people lost their jobs. He got rid of fracking, so tens of thousands of more people lost their jobs. He wanted to end coal, so even thousands of more people lost their jobs. Trump was in office. We were the #1 exporter of energy. Now we are the #1 importer of energy. That idiot, deaf, dementia guy that's in office now used up all of our reserves. It's supposed to only be used for wartime, but he wanted to look good for political reasons, and he used it up. Unlike when Trump was in office, he built that surplus up. He built it up. But Biden went in there and took it all away. This guy is going out of his way to purposely sabotage his country so that his Chinese associates could benefit from this. This is really bad, you guys. But anyways, let's keep going.
2 million barrels a day, excuse me. So all of that said, it gives Powell the opportunity to pause here and let the markets catch their breath, the credit markets catch their breath over what he's done. Gives them maybe this month, maybe he won't even raise in July. But then I think you come back after Jackson Hole and go into Labor Day, I think he'll raise again and possibly even raise multiple times before the end of the year. And we'll wind up somewhere around 6% by the end of the year.
What did he say? Multiple times before the end of the year? Hell, I said 2 times. Remember, you'll own nothing and you'll be happy.
Okay, 6% by the end of the year. Let's rewind to what you just said earlier. And you said he will continue to raise until he breaks something and that something needs to be broken. What do you mean by that, Tom?
I think it's the offshore, the leverage in the offshore dollar markets. This has been my thesis from the beginning, that Powell is trying to gain control over U.S. monetary policy. And he's doing so through 2 ways. And the first way was by sunsetting LIBOR and implementing SOFR. And SOFR is the secured overnight financing rate, which will become the law of the land in the next 5 days, right? June 30th is the official end of LIBOR as any kind of debt indexing rate for U.S. dollar denominated debt domestically produced, right? And by the way, most of Canada's major banks have also adopted SOFR. So now you've got North American banks are all on the new standard. That means that no longer, if there's a credit crisis in Europe, does that translate into an effect on interest rates here in the United States, as adjustable rates previously indexed to LIBOR would then blow out if LIBOR blew out, even if the bank in question wasn't in trouble, right? You could have adjustable rate mortgages and credit card rates blowing out to the upside because LIBOR blew out to the upside because a French bank got in trouble or an Italian bank got in trouble, and the ECB had to respond to that, and the LIBOR board would respond to that. That decoupling between the U.S. and European markets is what's on the table here, and it's been the main reason why I've said that the Fed would raise interest rates, because I see Powell as a guy who's trying to re-domesticate U.S. monetary policy, which is.
Keep in mind, every time that Jerome Powell raises the interest rates, foreign currencies suffer. So if you invested in the Vietnam Dong, every time they raise a rate, the Vietnam Dong gets hurt. If you are invested in the Iraqi dinar, every time they raise a rate, the Iraqi dinar gets affected.
It's been, honestly, for years under Bernanke and Yellen, and even during COVID, subject to the whims of the foreign demand for dollars. And that's changing, and that's what needs to be broken. And the net effect domestically will be there's going to be a lot of commercial real estate, which is already underwater. Class A office space in the United States is running it. You've got 20% vacancies in hot markets like Dallas. And
he's telling you that the real estate market, including commercial, are underwater. They're hot because every time he raises the interest rates, people can't afford real estate. So if Jerome Powell is supposed to be the good guy trying to fight the World Economic Forum's New World Order agenda, then wouldn't it make sense for him to cut interest rates so that people can afford these things instead of raising interest rates, getting to a point where people are vacating or foreclosure or anything else in which they're losing their property, and people like Vanguard, Soros Group, and BlackRock are coming along and buying them?
In Miami and others, it's only going to get worse from here.
All right, so you're saying that Powell is trying to decouple the US and Europe by design, that this is an intentional move here. Before we elaborate on that, because that's a lot to unpack there, let's just focus on what you said with regards to your outlook on the commercial real estate sector, firstly, and then the housing sector. But let's start off with commercial real estate, because yes, many are saying that this is where we're going to see the next cracks. The likes of Charlie Munger to Elon Musk have been warning about commercial real estate. What do you see happening there, and what impact would that have on those small regional banks that are exposed to so much commercial real estate?
They are so.
Small regional banks that are exposed to a lot of real estate. You cause those banks to collapse. They take those assets of real estate loans and they turn them over to whoever. Let's just throw a name out there like, oh, I don't know, JP Morgan and Jamie Dimon, picks them up. Then they end up with that asset.
Exposed to a lot of commercial real estate, but it also creates a huge opportunity in private debt. And that's a different, that's a slightly different topic. I just finished, I just released a discussion I had with Danielle DiMartino Booth of QI Research yesterday for my podcast.
Regular on Kitco News as well. We love Danielle. Yeah.
And Danielle was very adamant. And even took me to task about a couple of things, which was fine. I needed that. I asked her certain questions on purpose to see what kind of reaction I would get from her, and I got pretty much what I expected, which is that you've got commercial real estate. Some of it, it's trading at 39 cents on the dollar. You've got the middle of the market, as John Tuig of Raymond James has been talking about, saying that there's nothing in the middle trading. Now that's up to now, and a lot of the commercial real estate that's sitting there kind of marked the fantasy, because nothing's really traded. So they haven't had to mark anything to market.
Anyways, I don't have to keep going. I will leave the link so you guys can watch the whole full interview. This is a guy that's claiming that Jerome Powell is our hero. No, he is not. Let me remind you what they showed you at the beginning. Since February 2022, look at interest rates. Does that look like our hero? And keep in mind, every time interest rates go up, it makes it more expensive for people on their house payments, more expensive for your car payments, more expensive for your credit card payments. So how are people getting by? Every time they raise interest rates, it makes it harder for businesses to borrow money because they have to somehow pay that back. So if you're dealing with, oil and fuel, the gas prices go up to the point where people can't even afford gas. You can't afford food. You can't go to work. And this guy's claiming that Jerome Powell is our friend. I don't think so. He's full of crap. Anyways, you guys let me know what you think. I'll look for your comments and I'll get back at you later. I'm out.